Okay guys, going to go to Ask Scruff. Simple question about the wage maker. It's not as difficult as you seem. So let me flick this over because it's easier to show you than tell you. I want to pull up the question as well. So it's for Jitterbug, a little salute to you. When the builder's saying size 61, is that price per pip? It's your maximum position size. And then if you split the trade, are you splitting the 61? Yes. And what about the stop loss? Do you divide by 61 base? Well, let me show you. It's based on a spread betting platform, so everything is priced per point. So it's done in real money, not lots. So in this scenario, what it's telling you is your starting balance is 512. So it'll work out what it thinks the maximum bid of that is based on the normal formula of £1 1,000 or 10p 100. Okay. You've also got an ultra trade. Hello, my love. An ultra trade where if you think everything's singing and dancing, that will be your maximum, but you base it on here. Now, to the right of this, it says split. Now, depending on how many splits you're going to put in, it'll tell you how you can divide that up. Now, if I pull this down and just move my head out the way, you'll see there's a little box here with a number in it. How many splits are you going to take? So that's based on 3. I go with 5. So it'll tell me what the split value is for 5 splits, and there it is there, it's 10p. All right, so it breaks that by my splits. They're just eye shots to think about what you're doing. When you come here, you drop your date in, put the balance that it started with. Now here you would put in what you're going to invest for the day. Now you can do it trade to trade. I do it for the day. So I'll show you how to do both. So if you put, say, 5% for the day, it's telling you across your trades, you can't lose more than 25.60 on the day, then you stop. Put your maximum bid in here. So in this case, it is 51. Right. It's now telling you if you went 100% to market in one position, how far that can go. Well, it can go 50 pips. If it goes 50 pips, you've just used up all of your investment. That's one way of doing it. And then when you put your P&L in, it works out. Just drop that onto there. It kind of works out what you've been up to. So you won it. That's the change for the balance. How many pips it was, just shy of 4, which is correct. Now it also gives you an investment target. Now the investment is the minimum criteria you want back as an ROI. So if you're putting 25 quid on the table for the day, and that's your trade, the minimum you want back against that is 256, which is 10%. That helps you sort of visualize what you're trying to get up to. So if you're pulling a trade, you can still feel a little bit better, thinking, well, you know something, that investment made me 10% because I pulled it at 4 quid sort of thing. Okay. Now up here, this is a bid size calculator. So you put your bid in there to start with, which is 51. Now here, depending on whether you want to compound your position size, you can say, well, every 5 trades, I'm going to increase by a certain amount. So say 5%, and then it'll tell you what your next bid is. And then you can keep working like that. Now, that's the way I do it. I look at it that way. So I know what the maximum parameters are based on my full position, 100% point of entry. So I know it would be 50 pips, and that's what it is. But I don't want to pay that. So I would then break that down, which would reduce the exposure, etc. Now, if you're doing it trade to trade, you might say, well, I want to do 1% per trade. So that's now telling you this particular trade will be 512. And my position size in this case will be 10p. And then this will then work it out again the other way. So it's now broke down that. It's still telling you 50, but now it's an individual position. And away you go, and the criteria is exactly the same. So that's the idea. These things here, they're not, just because it says 51 pips, it doesn't say that's what your stop should be. So you just arbitrary put 51 pips in the market. What it's telling you is once you go beyond that, you're exceeding the investment that you're willing to put on the trade. That's what it's for. Your pip wants to be less than that, or your stop wants to be less than that. So hope that helps you. Catch you soon.